All right, guys. Hopefully we're up and running here. We'll see. I'm starting a new stream here, so we probably got people popping into this one. Thank you guys for waiting a few minutes. I kind of went, believe it or not, I went off on a rant in the last one. So here I am. Sorry, it took a few minutes. Anyway, close today. I think I only ended up about 50,000 across all the accounts, which was kind of disappointing because I was up over six figures. So I was really digging that. But whatever. I still think I'm up 350 to or I'm sorry, 375,000 for the week. I've got no complaints with that whatsoever. Jesse Rant, I know, right? It's crazy. Who would have thought? Anyway, so the ones that did the best today, Tesla, PayPal did all right. MicroStrategy, Hood, and again, we got some retracement on the miners today. Whatever. It's kind of to be expected. I'm not worried about it. You're in beast mode. Sometimes I'm in beast mode, man. I don't know. I just get excited. So chips took a step back today. I don't know. That's probably healthy. We still had. I love that Tesla was up 3% at the end of the close today. That's just badass. UPS took a hit. I'll have to see if that's earnings related or not. Very curious about that. It's very important to follow the transportation sector so that you can understand how the economy is doing. Because transportation, shipping, logistics, all these things, they are like the backbone for what's going on, at least with good related products and some service too. But transportation is it's a big thing and it's important. So we'll probably need to take a look at that here in a second too. But again, all in all, not a bad day. Let's look at the indices because I was in this other call, so I'm imagining they sold off a little bit near the end of the day. Yep, it looks like S&P down 0.28%. Have not back tested this fib yet, but I could totally see that happening. That would be natural to kind of go near the 51 and 75 range, something like that. And then let's take a look here at the NASDAQ. Same thing. So let's see. Did it do worse? It did slightly worse. That's what we want to see. Did it drop underneath? It dropped underneath our .618, so we'll see if that continues to go down. We want to see it go above and stay there. Russell is still outperforming right now. Which is good. So it had the least drop, and it's still well above that fib level. This gives me a lot of hope right now when I see the small cap index is doing well. Thank you for everybody who's joining. You guys are insane. Let me see something. I need to refresh chat here on the side. Okay, cool. I want to make sure that I have the chats at the top here. Jeez, there's so much shit in. Okay, wow, there's so many so many people have joined. It's overwhelming my screen. All right, so the indices again are doing okay. I do want to see the Dow Jones Transportation though, so I'm going to pull that up. I want to see how that's doing. Here's the industrial. Yeah, transportation. Okay, here we go. So this actually didn't do too bad either. Not a horrible day. Let me see what FOMC. We're going to go over some economic indicators here in a second. Do you like BITO or should I just focus on CLSK, Cipher, Mara? I don't love Mara either, but Grant, I would focus on MSTRs, CLSK, and Cipher myself, personally, without giving away financial advice. All right, so we're at about 70.7% for our chance of lowering rates in June. So that's gotten about 1%, a little more lower than it was just the other day, probably based on economic data that had came in today. Let's look at some of that real quick. Durable goods, ex defense, was actually lower than expected, but it was a little bit better. These are month over month numbers, so I don't want to look at them, but these were pretty much flat to down. Nothing too exciting here. Redbook year over year. This is retail sales for most of the major retailers. This covers, it's actually not, it represents 9,000 stores across the United States. So same store sales, and these are judged year over year. So we're still seeing growth, and I like that, right? I like the fact that we're still seeing growth here and that it's not rolling over. And that we actually beat previous numbers, 3.4% last time, but now we're seeing 3.9. That's good for the retail sector. I like to see that. The Schiller Home Price Index year over year ticked up some more. I like seeing this because, again, people's wealth are in their homes. And so I kind of want home prices to stay higher as rates drop. So I'm okay with this right here. I want to see stuff like this. I don't mind if housing is still expensive because 2/3 of the economy benefits from that. Let me see. Home price index, I think, is pretty much the same. It was, yeah, it's about the same. It was lower than expected, but again, it's still sitting pretty good. No complaints there. Now, the manufacturing data is where we're falling again. So you could see we were supposed to get the manufacturing index for Richmond, that section of the country, like Kentucky, West Virginia, all that kind of stuff, Virginia. It was -11 versus -4 for a forecast, and shipments were -14 versus -13. Now, what did get a little bit better was services, which I think is going to be kind of the leader for the entire country. I think if anything gets us out, it's the services sector. But you could see here how we've kind of been in the slumps for manufacturing for a while. Now, here's the thing. Historically, when we've been this negative for a while, whether it was 2008, whether it was in the 2000s range, or whether it was more recently here in like 2012, when we've went this negative for this long, we bounce. And we are establishing higher lows here. So there's a potential that things will get better and we'll at least have some yearly rotation, right? And from what it was year over year, benefiting us. So I think that we'll have that over the next quarter or two. Now, another thing I like to see, again, I think the services sector is going to be a stronger part of the economy. And we got a -7 on this one where we expected a -12 and the previous was -16. So it looks like services is climbing out of its funk in this region of the country. And again, this region, I think it says it here. Yeah, so District of Columbia, Maryland, North Carolina, South Carolina, Virginia, most of West Virginia. Kind of a weird culmination of locations, if you ask me. But anyway, so that's that. So there's some hints that this is getting better, but still not great. Dallas Fed Services Index. Now let's pull this up. So we had a -5.5. It was forecast at 6. So again, this is a slight improvement. And again, we're kind of seeing the same thing. Higher lows where it looks like we might start drifting a little bit higher, which is great. We want to see that. And so I would continue to look for this number to climb higher. Revenue index 4, where it was a -2. Dallas Fed revenue index. Okay, so this is a pivotal gauge of the service sector conditions in the state of Texas, United States. This indicates that the activity within Texas sector expanded at a slower pace during this period. So forecast was -2, actual was 4.4. So this was better than expected, and this pertains to the revenue. So this is something we want to see. Let me see what else we have here. And not really much else. And tomorrow is a void of economic data. So I don't know if we're going to go higher or lower. It looks like things are kind of choppy to down. I don't know if there's additional news that you guys know anything about that you want to throw in here that happened in the last couple of hours. But we have no real economic data tomorrow. So tomorrow, outside of mortgage stuff, but everybody expects that to be shit. Just because it's first quarter and rates are still high. So that doesn't really matter. Now, I'm assuming the fear and greed is probably in greed. Yeah, we're in the middle of greed. Great. So, not a crazy level. Nothing really to be afraid of, I don't think. I do want to jump over here real quick and look at a few things. Not that. Okay, let me change this view. Let me do this. I'll do it this way. There we go. Bitcoin. You know I love Bitcoin. Let's talk about Bitcoin for a second. 2 months in, Bitcoin ETFs have a $60 billion AUM, or assets under management. That's what that term means. It took gold ETFs 15 years to do that. I think there's signal there. You should pay attention to it. I love this. A gold miner, Nilam Resources, was up, I don't think they are anymore, was up 1,900% today after they announced buying 24,800 Bitcoin. So if you want to exponentially increase the returns in the price of your stock, buy Bitcoin. That's actually the message that's going out to companies. Think about that. If you're another gold miner, do you think maybe you're thinking about buying Bitcoin? If this is what happens, think about this. This company right now could go ahead and issue more stock and dilute it and enjoy the benefits of 1900% in gains, and then they could buy more Bitcoin or expand their mining operation. This is a no-brainer, right? You think these are the only companies that are going to do this? I don't. All right. I just want to gloat here. On March 23rd, roughly 3 days ago, I had said that a little over 3 days ago, I said, hey, we're going to pop up here. We'll maybe get up to 72. Then we're going to chop back down. And then we're going to start going back up again. And I just want to note that that's exactly what we're doing. So, kind of cool. 2 points for me, right? All right, let me see. There's some other stuff I wanted to pull up. Again, just like showing previous cycles. And yes, they do play out this way, especially in an environment where you've got ETFs that didn't exist before, and you have just so many of the stars aligning from what's happening with global liquidity. We're in better position than when we were in 2016 or in 2020. And you can see from the technical trends what happened when we broke through new all-time highs back at those times. So you're here. If you don't understand that, this is not the fucking time to sell stuff. You can nibble on some and take some off the table if you want to have a little dip buying money or want to go into something else. But the biggest mistakes I've made in the other 2 cycles I participated in was not being aggressive enough in buying investments that had a multiple to Bitcoin early. Didn't make that mistake this time. I was in calls on CleanSpark in the dollars, and MicroStrategy at like 100 and something. I don't even know. Maybe 80s. I don't even know. It was low. Maybe that was better. I don't know. But it was low, and I had calls on those guys then. So I did it right this time. I sold too early. I wish I would have kept them longer because they just kept fucking going up. You think 1,000% is enough, but it's not, evidently. But the biggest mistakes I made were not being aggressive enough early in the cycle and then delevering that multiplier on the way up into things that were more stable and it had less volatility or beta associated with them. Volatility, beta, kind of the same thing, right? Let's just keep it simple. And you do that as you get higher. And then once you really feel like you've made an obscene amount of money, it's okay to step back. There's going to be other things to invest in. I know the Bitcoin maxis will tell you never to sell. That works if you just have a shit ton of money and you can borrow against a small portion of your Bitcoin and never have to sell. That's a great idea. But if you're like a normal person or somebody that, kind of somewhat rich like me, you gotta figure out taxes. You gotta think about selling. You gotta bring in some revenue. You gotta do things, right? And so I will be selling near the top. I'll keep my private Bitcoin stash. That I always add to every cycle. I've learned that, but I will sell and I'll move into other things. Because what if Tesla does drop and it gets into the 100 range or something, and I've made a shit ton off of Bitcoin? Of course, I'm gonna put some money into Tesla. What if Palantir has a rough couple of quarters or a year for whatever reason? Of course, I'm going to buy some of that. Diversification and asymmetric opportunities is what's made me rich. It's what made me over 700% last year. And I'm not going to stop doing that. Again, I just wanted to point to the fact that B of A, Sutmeyer, so an analyst of B of A, said, current secular bull market is middle-aged and could extend into 2029 to 2033. I don't think that's accurate. I think by the end of 2025, our cycle is probably going to wear down just by the sheer amount of government debt being accrued around the world. Something's going to give. Probably in China first. That's my 2 cents. But again, I think this is kind of the course that things are going to take. Now, I want to jump. Let's pull in some. Let's look at Bitcoin real quick. I haven't looked at it since I was doing other stuff from that CleanSpark meeting. All right, so Bitcoin. I just want to point out this looks exactly like what I drew 3 days ago. Exactly right. And I'm going to turn this, since we've still done it, and I don't know that we'll hold it. I actually think we could drop underneath of this. But I'm going to turn this one green, just like all these other supports. So, except for this one. This one is just my arrow. I'm going to move it up. So this is my arrow saying where we're going by the halving. This is still what I think is happening. I'm going to move it over a little bit. But here's what I think is still happening. And if I'm right, we're going to make a lot of money, everybody that's involved in this. A lot. All right. Let me pull up the usuals real quick, and then we'll get to your guys' requests. Oh, hey, somebody just gifted 10 memberships. Joe, you are a stud. If anybody wants one of those, click on that little present, man. It's free for a month. Thank you for doing that, man. I really appreciate it. It's awesome that that people support the community. That means a ton to me. All right, so Neil Thacker, Whale Request, CDNS, originally known as a creator of electronic design automation, EDA software. The company currently develops software, hardware, and intellectual property. All right, that gives me a rough idea what they do. Still not totally understanding it, though. Pretty steady Eddie. I like the growth. I mean, obviously, you like a chart like this. Like, look at this. It's stupid. It just keeps the same rough angle. Had a tough time in maybe 2022-ish, but wow, it's really done well. I don't love companies that have really done well because it's like, I don't know how much of an opportunity I have for them to continue. I do love their earnings, though. Look at the bottom of this. Look at the earnings in green down here. This is just, oh, here, let me switch back here so you can see it. They always, like, here's one, oh, they messed up here. And 2015, they fucked up. And then back in, it looks like if there's a dot-com bubble, they might have problems. But this is pretty otherwise. I mean, it's not ugly. Let's draw a fib, and then we'll look at them in closer level here. And just so you guys know, when I do these, if it's a new chart, it takes me a while to draw this out. I'm going to probably set it there. Go to the bottom. I'm going to do this. I'm going to, yeah, a little bit like there. I think that's fair. All right, so we did get over the .618 fib, and maybe are turning it into support. What kind of company? This is an $86 billion company. Let me do this. We're going to pull them up. Because I don't understand how people do technicals without actually looking at the financials of their company. I think those people are full of shit. You're just not as good if you're not doing this. Please unblock me. Oh, I blocked you? Hey, oh, okay, cool. I got your ID. I'll get you out. I don't know why I blocked you, but I'll undo it, man. All right. I get block happy sometimes, guys, but you don't have to give diff 10 memberships to get unblocked, but I do appreciate it. All you got to do is ask. If you're not a dick, I'll let you back. Now, revenue is steady, 19% revenue growth. Estimates are looking positive. I mean, this company just keeps growing. But what are they netting? 323 million. So they got an 82 PE. That's in 53 forward. So to me, this is getting a little rich. Not that they're not a great company, not that they won't work their way into it. It's just if software gets hit a little bit, they could decline. But it looks like a good business. It's not really my thing because I'm looking for the asymmetric opportunity. But this looks like something where if the economy keeps just chugging along, their guidance looks good. Let's see, insider activity. They have been, maybe they're starting to, if you look here though, here's one thing I don't like. It's when they're selling more than they're buying. I don't love that for the insiders. Institutional ownership was dropping for a while. It did just tick up a little bit. Short interest is very low. Yeah, I don't know. It's a decent company, but again, it's an $86 billion company. It says on here. I think it said 83 on TradingView. 86. So that, to me, this is rich. I personally, all right, Patrons, please never block me. I'll try not to, man. I'll try not to. You guys are great. But again, this is done really well. So this was a $52 stock, and now it's 320-ish. So personally, for me, this is just a little too much. Oh, I see the rest here. I got to read it. I got to move my camera a bit so I can read it. All right, used to design chips, chip-style products, and printed circuit boards while also selling hardware systems that run its chips design software. So I see it's got a little bit of an AI play. So that, yeah, again, I don't know. It seems rich to me. Or not an AI play, but a chips play. But the chips narrative could maybe go on for a little bit. Didn't do too well today. But this company seems to be doing all right. For me, there's so many asymmetric opportunities though between like Bitcoin, Tesla, and PayPal, and just all this other stuff. that I struggle to be interested in it. Oh, and I forgot to cover some of mine, so let me do that real quick too. So I'm going to jump into PayPal real fast, and then we'll get back to the rest of you guys' tickers after I get through my stuff. So PayPal closed up 1% today. Not bad. Almost got to its second higher high. Really can't wait to see that. Did it get to it? No, it didn't. Not yet. But if we jump out to like a 3-day time frame, you can see how we're closing much better than we did back over here when we hit that previous high. It was way less sustainable, whereas now it's looking really good with the volume over here. We're staying above that. I like what I'm seeing. Would love to go higher tomorrow and just crack this fib level. If we could get a bounce tomorrow and hit that, and we're up 0.34% in after hours, that's not a horrible sign. But if we could do that, if we could go up even higher, oh, that would be sweet. Get that second higher high, first time in 3 years. That would be a blessing. Hood, up 1% today, up 0.5 in after hours. I don't hate it. We're just continuing our trip to 30. I think that's an easy trip, and I think we're going to keep going there. Square actually did pretty good today, up 1.43%, and just another day. So yesterday we were above the previous resistance line. The day before we were under it. The day before that we were above it. So 3 out of 4 days we spent above this previous resistance line. If tomorrow we can find support here again, I don't know. I think it's time to go up and test this next fib around 89. SoFi. I think SoFi got hit again today. I bought shares in SoFi. So I bought a couple of things. I bought a stock that I'm going to post about tomorrow in a members only video. So if you're not a member, join if you're interested in seeing that stuff. I'm going to try and do a stock maybe once every 2 weeks, at least once a month that I'm interested in. And it won't just be something I talk about. It's going to be something I buy. So tomorrow I'll unveil that and talk about it more. So again, we're dropping down here on SoFi. Oh, make sure you like too, guys. If you could like, it helps the algo on this. If everybody could make sure they like, and then, again, do the alerts, ring the bell, do all that other stuff. And if you could comment after the video, all that stuff helps support this group, and I greatly appreciate that. So again, we're going down to the support zone. We got a fib at the 0.5. We've got volume peak here. We've got the 100 moving average curling around in the weekly, and we've got the previous resistance line. This is just like a quadfecta of support. I do not expect us to go under it. So I think I put like another 7,000 just in stock today for SoFi. And then I also bought some, what else did I buy? I don't know. I'll have to look. I don't remember. Oh, MicroStrategy. Or no. Yeah. When it was down, it was red for a little bit. I bought some of that. And then I bought this other stock. So, all right, let me pull up. We're going to look at Tessie. I say Tessie because that's what I call my car. So maybe my Cybertruck will be Cybe, or at least that's the nickname my daughter gave it. All right, here we go. I'm going to get rid of some of this stuff. I got too much going on up here. Too much stuff. Now here's what I love, and I'm going to save this real quick. I love that Tesla was up 3% today and closed up 3%. I love that it came really close to testing. Let me shrink this up. It did, actually. It tested this resistance line. I love that. The chance of us breaking above that, I think, is quite high. I think there's a chance of getting up to like 200, maybe 207, because we never did quite fill this other gap over here. Then maybe it takes a break. So I might lighten up on some of my calls because I own a shit ton. I've got like 300,000 or more now, maybe 350,000 in calls. Again, up 0.53% after hours. I like that. Again, look here. So we've got these bullish divergences on the MACD, a bullish divergence on the RSI, and then we broke down underneath this previous support zone 3 times for the 4th time, but then quickly wicked above it and then established support. So it's kind of a no-brainer that it was going higher from my perspective. Also, this is a new indicator that I'm starting to use. I think he goes by Market Maestro or something like that. He's a cool guy. He got it from a friend. I'm just paying attention to it and trying to see if it provides a lot of signal right now. I can't confirm that it does outside of the stuff I'm already doing. I don't know if it provides anything extra for me yet, but again, it's interesting. All right, here, let's see. I want to look at a couple of others, and then I'll get back to your guys' stuff. And then we'll go for a while. For anybody who's interested, too, Robinhood's doing their thing at 6 o'clock here tonight. I think it's 6 Central. And so we're gonna rock here maybe till 5, if people are interested, maybe beyond, and go through as many charts as we can get done, and then we'll jump over to that. ARCG is still the same. It's down 1%, up 0.6%. I think it's in a bottoming pattern. I haven't bought any more. I might tomorrow. Maybe just stock for now. I don't know. I might look at it. I might throw in some 2026 options too. It just all depends. I might. We'll see. All right, next. MSTR. Let's just look at you real quick. And I'm going to bring up, there's some other screens I can show that I found in TradingView that show like my portfolio and can show performance. I'm probably going to quickly scan through some of that in the future just so we can get through this quicker and get to your guys' stuff. But again, MicroStrategy looks great, up 1.13%. I think we're going to be looking at a short squeeze. If Bitcoin can maintain and just get above 70 and go higher like I think it's going to, at least, test. I think it could test up to the 74 range here soon. If it does that, I could see us closing this gap up to the 2400 range really quickly. Because the shorts are fuel. They're just fuel. And it's not like Bitcoin's going down. All right. And I will not forget to unblock you, Joe. I will not, my friend. All right. So let's see what else we got here. I think we already looked at clean. I'm going to skip the rest. Let's go back to you guys again. All right. So can you talk about Bark? I can. That was like the dog discretionary investment thing. And they got it like a subscription program with them, or pet subscription thing. They're retracing a little bit off the 100, still under peak volumes right now. I should give this a proper fib retracement. This is one I'm actually looking at for like a potential, like I do these like 0.5% investment allocations with options that provide asymmetric opportunities. This might end up being one of them. I've got to do some more research. Only a $219 million company. And I think discretionarily they got beat up a little bit. Oh, what was the Bark? Oh, is this the right Bark? Is this the right Bark? Who gave me this? RD. Is this the right one? BARK? Let me just make sure. I think it is. All right, let me make sure it's over here. I don't, unless I typed it wrong. I do not see it. Oh, there we go. I must have had a typo. Sorry about that. All right, so let's look at estimates here. I don't think I missed it, Intelligent. I'm back at the beginning. So I'm at the beginning of the chat trying to do them right now. So you're probably coming up, man. All right, so revenue is up a little bit, still kind of flat. The EPS is still negative. So again, this company is beat up, right? They're only a $219 million company. The problem is their cash is burning, and it's getting closer to their debt levels. And I could see them having to dilute shares here soon. And their operating expenses aren't getting much better. And pretty good insider sales in Q2. A little bit of insider buying in Q3 of 2023. But institutional ownership is dropping. There's just nothing that screams this company is turning around. Maybe that gets better if rates are lower and the economy is good. But I don't know if these guys are a direct benefactor of that. So I'm still not interested. BE Bloom from Sean. Let me pull that up. I don't know if I have BE. No, got Bean. Copy. Yeah, I'll try and get through as many as I can today, guys. I know I'm behind on some of these requests, and then there's more of you. So that's definitely going to have to. Last weekend, I still wasn't feeling good, so I didn't get my weekend sessions in, but I'm going to have to try and figure out some of those. Even though Saturday morning might not work, I might have to do like a Saturday afternoon and then a Sunday morning thing. I don't know. We'll see what availability is like. Bloom Energy. So this obviously took a major dump in 2019 and March of 2020. So the energy sector very tied to it based on the name alone. They're $2.43 billion. They're kind of rolling over again. Higher low on the RSI for the weekly. That could be a positive sign. MACD has a higher low too. I mean, a few. There's bullish divergence going back May of 2023, so almost a year. But what do their technicals look like? What does their forecast look like? This is the stuff that matters. What were these guys? Beam? Or let me see. I gotta get the full name because I don't think. Bloom. Okay. There we go. All right. So let's see what we got here. Revenue growth, a reduction of 23% year over year. And they had a decent quarter. They actually made money, but they're $2.4 billion. What is their estimate? Not really a lot of revenue growth and still not really profitable. There's 19% short interest on this company, which is a shit ton. Their electrical equipment and parts. They diluted tons of shares last quarter. Their debt exceeds their assets. Insider activity isn't much there. Institutional ownership is growing, but that could just be ETFs. It's not necessarily a good signal. I do like that their revenue is getting a little larger than their operating expenses, and that stock-based comp is becoming a lesser percent. But the bummer is they're probably just paying themselves less because they're not making a lot of extra revenue. I don't know. This is not interesting to me at a $2.4 billion valuation. You can lose money with any company. You don't have to have a $2.4 billion market cap. That's still just a lot. If this looked like they were forecasting for something better in the future and they were like less than $1 billion, maybe 500 million, this would be more interesting. I don't know any more about this company though. But Sean, I don't know, man. I don't see asymmetric gains here because I just don't see how they should be valued at more than what they are today. You got to make money. You got to show growth. Jason Crump, Sam from BTBT was on Space this past weekend. Some interesting flywheels for a BTC mining company, staking ETH and AI plays. See, I don't like any of that shit. Here's the thing, Jason. I don't believe in any of that, man. And let's pull up BTBT. I don't care about their chart. I just want to look. So here's the thing. This is Bit Digital. These guys aren't too bad. Their estimates, let's look forward. So they look at revenue increasing. They haven't started making money yet, which is kind of a bummer. They don't hold Bitcoin, right? Do these guys hold any Bitcoin? I don't see any on here. Institutional ownership's increased, but that doesn't matter because that's just ETFs. That's just ETFs buying these companies. Probably a lot of BlackRock. Yeah, BlackRock, 7% holdings. 19% short interest. There could be squeezes that push these guys higher. But I don't care about this fucking place. First off, staking ETH. ETH sucks right now. I was really excited about ETH, but it doesn't look like the ETF's going to happen. And layer 2s are benefiting from EIP 4844 going into effect here recently. Some of them are getting, anywhere from like 7 to 12x improvement in their fee structure. So I could see layer 2s doing well. They have much smaller caps too. But what's going to drive ETH higher? Sure, it's a deflationary asset, but if they don't get an ETF and all the transactions are happening on Solana, like, and the fees are still high on the main branch, like, and ETH is. James from Invest Answers makes really good points. He talks about first principles a lot, and he talks about sometimes the simplest solution is the best. Again, it's a first principles thing. So Solana, you can make arguments as centralized, but the fee structure is incredibly cheap, and all of these other companies are moving to it. So I digress a little bit, but so I don't think ETH is a great play for Bit Digital right now. And then this AI thing, that's the same kind of shit Hut's doing. To me, that's trash. I don't think that's good at all. I think that's a waste. And let's just look here. I got my friend. Let me just refresh this. My friend Sebastian Ski, he has a Patreon where you can get access to stuff like this, and you can look at these PDFs. I don't know if he wants me sharing it. He hasn't said anything yet, so I'll just keep saying his name a bunch. Subscribe to Sebastian or Ski. He's a great guy. He's on X and he's on YouTube. And subscribe to his Patreon because it's awesome to have access to this stuff. Now, this is Bit Digital, right, that we're talking about? Yeah, BTBT. Now on here, it does say they have Bitcoin, so there might be something wrong with that chart. It says they have 848, so I'm glad they have a hodl. I wish it was more. I wish they would have kept building up over here and made their stack a lot higher. But here's the thing I don't like about this company. They're 2.7 exahash. And they're 2.73, and their future is 2.793. So these guys haven't been expanding, and they have no real ambition to expand. Now, they were expanding from the bear. They were getting bigger, but now they have no growth in front of them. 2.8 exahash is going to pale to CleanSpark's 50. I mean, these guys might be an acquisition target. I wouldn't own options for that reason. All these small miners, I would not own options because they could be acquired and you could never make it to your strike by the date. I don't have options on any miners right now. But again, I don't like this. I don't like, and let's see, what is their equipment? Maybe their equipment's good. Again, this document is a wealth of information. Miner speeds. Their equipment is shit. It's shit. I want 140s. I want 200s for these miner speeds. I don't want 88. All that shit's going to get turned off soon. All the hundreds, the 103s, they'll work for a little bit, but man, maybe give them like 5 months, 6 months, they'll all be in the red. Maybe before that. Sebastian could speak to that better than I can. But again, why? Like, I don't know. I just don't. It's great that they don't have debt. I don't care about their chart. I care about the fundamentals more than anything. It's good that they have some Bitcoin. I don't love that their estimates are to not even make money here in the future. I don't love that they're not going to expand because the multiple is going to go to the companies that expand because they're going to be the ones raking in the Bitcoin. CleanSpark has a 17 exahash, right, or will at the end of April here. They were running like most of last quarter, probably 13, 14s. They're going to be 50. So they are going to be rolling in Bitcoin, where these guys, it'll just be getting harder for them. They should have been expanding. That's my take. But hey, here's the deal. With miners, like I said in my last video with CleanSpark, if you haven't watched that, watch it, just from earlier from their fireside chat. With miners, the shittiest of miners will most likely pump near the end. Now, that could be a little bit different this time. We got a lot more institutional money in, and they're smarter. So those guys might dump on people that are dumb enough to buy in later. So it might not be as slick as it was last cycle. Don't get me wrong. But some of these might perform all right. But why not be in best of breed? Why not be in like a CleanSpark or a Cipher, in my opinion? That was a lot. Sorry. Model society, China and Tesla. How does China's risk impact your Tesla thesis? I'm right there with you on big Tesla expectations. P.S. Thanks, you've been awesome. Okay, so China is a risk. Like 23% of their sale right now comes from China. China is really only risky to me if we go to war, because then they're probably just going to assimilate. So that would suck. That's the concern with Tesla. I don't see war happening for at least a year. If longer, because China's in a world of hurt. Now, don't get me wrong. History tells us that countries that are in a lot of pain, like, I don't know, Germany, back in the day, Nazis, that when countries are in a lot of pain, war sometimes is the thing they revert to, right? And so a year from now, when elections are done here and the Taiwanese election, most important, there might be risk of war with China. I think that is becoming more probable every day that goes by. So there could be risk in the future for Tesla. I don't see it now. And outside of war, it doesn't matter, because even if things slow down in China, which they are, they can always take those and export them overseas for a fraction of the cost, and for what they produce in other locations. And they can sell those in different countries around the world. So I still don't see a lot of risk for them for at least a year, if not two. That's my thought on Tesla and China. That hydro bed at Planet Fitness is the bomb. Hey, you tried it out, dude? That is, if you guys don't, a hydro bed, if you ever have like backaches or your muscles are tired after working out, I use Planet Fitness. I keep it cheap, but I pay for their black something membership. I don't know what it is. Their premium one. And you get this hydro bed, and you sit on that for 15 minutes, and your back just feels amazing. Feels like you feel loosened up. You feel wonderful. The membership to me is worth that, just going there once a day and doing that. All right. Hey, Jesse, Jake Sawaski. Hey, Jesse, quick update on AVAX, please. Should I try to accumulate around 52? I can look at AVAX. I think with these, I mean, I think you get your shit coins now because you hold them for a year. I wouldn't trade them. I think you get them now. This to me looks like it wants to break out. I don't actually think, I think Bitcoin's going to go first, but I don't think this looks weak at all. I mean, don't get me wrong, it could maybe chop down to the, I don't know, the 45 range, maybe 52, something like that. I don't know, man. Here's the way I look at it. I've already bought all my shit coins. I'm going to hold them for a year so that I have to pay long-term capital gains because I live in the United States. And so I want to hold things for at least a year to reduce my tax obligation by half, if not more. And so I buy the shit now, in my opinion. Who gives a fuck? It's a $21 billion market cap. It could 10x. I mean, it could. Maybe 8, 7. So to me, it's like the entry from here I really don't give a fuck about. That's my personal opinion. And it looks like it wants to test higher. If it started to get closer to the 62 range, I would be afraid that it's getting ready for its next leg. Because once it gets above here, I mean, it's going to be above peak volumes all the way down. And it's going to start grinding over here for a while. And then it's just off to 118 or 113. So I wouldn't wait too long. Talk about TLT as possible trade. It seems like a slam dunk rate decrease before long. TLT and bonds. I've thought about that a lot, Drew. I was pushing that for a little bit. Just because you would think, here's what you would think, right? You would think that if we had the worst bond route since the 1700s, that it would be a good investment. Right? You'd think that. And it could break out eventually. But here's the problem. We're doing shorter dated treasuries for our issuance nowadays. And we're issuing tons of debt. And countries and people are starting to go, is it sustainable? Is this sustainable that we've printed $11.1 trillion essentially since the pandemic? Is that sustainable? Thanks, Dave. I'll try and get to that for sure since you tipped there. Is it sustainable? And I don't know. Like, we might be able to grow our way out of it. And I hope that's what happens. That's what I'm betting on. I'm betting on AI and just Bitcoin preserving wealth and automation and robotics and all these things I think can get us out of this hole that we have from the Keynesian school of economics where you print fucking tons of money. And then when you can't figure out how to balance a budget anymore, you just fucking give up and then keep printing money at an ever increasing rate until you're where we are now, where your interest payments on your debts start to exceed your massive defense budget. And I don't think that's a good place to be, man. So should it be a good investment? Should it be a good investment, the 20-year bond? It should. It should. Maybe later I'll be interested in buying some of this, depending upon how well we manage budgets and if we start embracing capitalism more by lowering taxes and trying to make it to where we're not printing as much money and letting price discovery occur within our economy while not trying to crush it. Lower rates are going to have to get down. Then maybe this turns into an okay play, but right now I don't love it. Issuance is still high. That's why it hasn't really had a good chance to break out and get above 100. And again, you get a dividend on it, but I don't know that it's worth it right now, man. If you have too much fucking money, then TLT is an option for you, especially after a 300-year route. What is it? Whatever. Oh, sorry, not that long, but a really fucking long route, hundreds of years. It's insane. Can you imagine? I feel bad. I feel bad for the people that were taught about the 60-40 portfolio, and these poor motherfuckers put their retirement in here, and in 2022 they got fucked on stocks, and then they got equally, or if not more, fucked on their bonds. I feel bad for those people. The government screwed them. They stole their wealth. They stole their retirement accounts. They made it harder for them to survive. It's bullshit. All right, anyway, here's my rant. Lisa Marie. Hey, Jesse. DKNG. All right, let me get in there. I think I got this one. I'm going to try and slow down these rants. No, maybe I don't. I'm going to try and slow down the rants so I can get through more of these. All right, DKNG. Let's pull you up. Oh, DraftKings. Oh, gosh, I haven't looked at this. Wow, this really came back. That's amazing. Why? Let's see here. I'm not a big gambler. I went to Vegas and I didn't even put anything in the slot machine. But okay, revenues are going up, getting closer to actually making some money. But it's a $23 billion stock that is hopefully in Q2 going to make $30,000 or something, whatever that number was, in profit, I should say. And then their revenues are flattening out. Could be arguably seasonal. Looks like Q4 seems to be the big spike. So one could argue that it's seasonal and Q4 will be better. I don't understand why this is a $23 billion company. I don't care about it. That's my take. I'm an older gal, not on Twitter. As a member, are we able to occasionally email you? Not email, just on X. You could DM me or something. But that's probably about as good as it gets. I don't give out email. I never even look at email, frankly. I'm sorry. But definitely on market recaps, if you come in here and you put in notes, you can ask questions and I can try and answer them. And again, I'm not a financial advisor. I'm a high school dropout. There's a disclaimer at the bottom. People need to definitely do their own due diligence when talking to me. I can be wrong. I like to think that I'm not wrong very often and that the data backs that up. But I could be wrong. And so you should be consulted. You should everybody should do their own research, man. Because it gives you confidence. If nothing else, you can follow other people that are really right a lot. Invest Answers is brilliant. He's a great guy. But here's the thing. You better understand what the fuck he's talking about. You better put in your time to do the homework. Because otherwise, when shit hits the fan, you'll get scared. And so you can follow people. Following people is okay. But I highly recommend you put in the work. Because if all you do is follow, you won't have the cojones to stick with a fucking PayPal for 9 months while you're losing six figures to break even and then hopefully make a couple of million off of it. You won't have the cojones for that. I can tell you that because that comes with conviction and that comes from work. All right, so these guys had a big run and then they dropped. Looks like we found a base kind of on the RSI, but woof, that's a drop, man. 184 to 35. That's some painful shit. Let's see what's going on here. What was this one? Colby, I don't know if you have any more on this one. I'll try and I need to get better at looking at my list of for the chat that I'm trying to go down systematically and then listening to you guys. So I got to get better at that. I'm just trying to roll through these quick. So revenues they had a big drop in 2019. Is that this? No, this is more recently. PE is 15. It's not high. Forward is 12. Let's see what their estimates. Their guidance is increasing. I mean, they're making some money. They made $230 million. $9.6 billion company. They got debt. 4% short interest. Lots of institutional ownership for a company that is internet content and information. I don't know what they're looking at I don't know what they do, but they definitely had something major happen in 2020. Massive drop in revenues. It looks like they've been doing a little bit of buying back. That could be good. Institutional ownership is not getting better. So there is a lot of institutional ownership, but they don't seem that interested on it. And 7% of their revenue goes to stock. And they are profitable. And one could argue that for the software sector, that's a low PE. I don't know anything about this business though. And this is pretty wild moves, man, for 2021 here. I guess that was probably the time. Was that when revenue dropped? No, that was 2020. Yeah, so I don't get that. I don't understand what's going on. Match Group, is this Match.com or something else? I don't know. I don't know what these guys do. So I don't know how to grade this. I will draw a fib for you. Where is it? It's probably March. Yeah, see, it's actually lower than that. It's lower than its March 2020 drop. I don't know what to say here. It's probably less about a fib. It's probably like more like this now. Let me see. What is this level? 2015? Yeah. Yeah, maybe. Yeah, I don't love that. I don't know what's going on with this, but from a PE standpoint, it doesn't look like it's overvalued, but I don't know. It's just weird between the finances and the chart. This is weird to me. I don't quite get what's going on with it. And it looks like Colby must not be here anymore because he didn't say anything. So we're moving on. All right. Jameson Coat just became a member. Would love a visual stocks review of Edgio. It's a CDN video streaming company. CEO recently departed and is at a multi-year low. Loving the insight so far. Okay, Jameson, let's take a look. I will pull up the finance one on this one just so I have it. And then I will pull up that as well. EGIO. And so, guys, for anybody who's new here, what I try and do here is I try and get it to where I'm looking at things and trying to determine if there are investment opportunities that could benefit this group while providing answers to questions, or at least my interpretation of answers to questions based upon what people are looking for. Like maybe they're invested in these things. Maybe they're interested in investing in them. I'll give them my input and they can do whatever they want. But I also try and grab needles out of a haystack and see if I can find, the ones that could be really good opportunities in the future. So Edgio is a software infrastructure company out of Tempe, Arizona. It's got low short interest. It's got a lot of retail interest. That's kind of interesting. Their estimates going forward show moderate growth to sideways, massive losses in the future. Maybe that's why their CEO left. I don't like what I'm looking at here at all. So yes, it's went down really fucking far. It's a $54 million company right now, which is not a big number, but their cash balance is going away. It looks like their net income could get significantly worse. Maybe like 60, 70 or 100 million in burn, and they only have 27 million in cash. This could be a company that's dead soon. So I am not interested right now, Jameson. If you know additional things for why this might be an interesting investment, great, let me know. But right now it looks like shit to me. Hey, bud, if you get this far, your price targets for CLSK and Cipher in relation to Bitcoin target, can you talk about your exit strategy? So my exit strategy is dialing out a risk on the way up. I probably wouldn't sell CleanSpark before 100, personally. Yeah, I wouldn't probably sell any of it before 100. And so my goal right now is to see what happens with the underlying asset. And that is always my focus, is the underlying asset. It's not so much CleanSpark and Cipher. I will look at them to try and obtain targets. My target right now for CleanSpark is 150. Cipher, I don't remember what I have for that. Let's pull it up real quick. I think I have that drawn out here. And these mining charts, you can find these on the top of my pin profile on X. I'm going to hopefully have a website here soon. Yeah. So my low target right now has us at $54 for Cipher. My high would probably, I don't know, maybe be in the 64 range. And I actually probably need to do a fib retracement on here. Or, yeah, I probably need to change it to a trend-based fib extension here soon. I'll do that and I'll update it later. But I would say in the 50s, it's a 10x in my mind. And the exit strategy, again, is I'll telegraph that the whole fucking way. So I'll probably not say as much now, but my exit strategy is focus on the underlying, figure out if Bitcoin's getting exhausted, figure out what's going on with the macro economy. And if things are getting riskier across the macro and across Bitcoin, then that's my primary driver. And I'm going to start dialing out of risk. And small cap miners will be a part of that. And so I'll start taking percentages, and I'll be telegraphing to you guys too. Every day, if I sell it, I'm going to tell you. So you'll know more in the future. And again, you can follow other people and figure out what their thesis is too. I am very heavily focused on macro, because if the world takes a shit or global liquidity starts to significantly plummet, I'll be reducing exposure to risk. And Bitcoin miners are risk right now. Now, Bitcoin itself, I could waffle back and forth a little bit on that, but miners are way higher beta, and so they're riskier by that nature alone. Larry Manning, CLSK, and Tesla. I did show those earlier, actually. So if you go back, you should be able to see those, Larry. I did them both. I think, well, maybe I didn't do CLSK. I'll do CLSK real quick. I did do Tesla. Right near the beginning, actually. The beginning of the chart review part. And then I had a Tesla, or a CleanSpark call, I guess. I didn't actually like pull it up and do it. So they were down 0.9%, down 0.17% in after hours, finding strength on previous volumes. There's actually quite the shelf here, which is what you like to see. You like to see this shelf that we're sitting on. And I mean, you got to realize this thing ran from a little over a week ago, we were at 15, and then we ran to 24. So, I mean, it almost doubled. Oh, thanks, Dan. First membership you ever paid for. I appreciate it, and I'm worth it. Love that. Thanks, Intelligent Computing. Appreciate you too, man. All you guys. The only thing that's difficult right now is so many people are joining that it's clogging up my comments here, so it's harder to kind of sift through this stuff. All right. Sean Kleiss. Jesse would be a reasonable merger with CleanSpark B Cipher. No, because it's too well run. Cipher's too well run, and they've got strong expansion plans too, so I don't think Cipher will be one of those. It'll probably be some of these other shitty miners, maybe even ones that are privately held, or ones that are in different countries that aren't managing things well but get really good energy costs and have a strong infrastructure. That's what Zach Bradford was talking about in the call earlier today, and I would say that he's spot on with that approach. Yeah, so CleanSpark. I still think with CleanSpark we're getting to 3381 here soon. If I'm right about the Bitcoin halving taking off, we could start to run even higher. We could get up into the 40s. If we get to that 93 range, I think we could even try and test 40s. Hey Jesse, can you take a look at Meta? Thanks for helping us learn. Meta, that's one I wish I wouldn't have sold my fucking calls so early. Oh, I hate myself for that. I made like, I don't know, 500% returns on my Meta calls for January 2025 when I bought these things in the 80s. Would have made so much fucking money if I'd held them. But I sold them up into here because I was worried, right? Like, I didn't know what was going to happen with the economy. And so I started to unload once we got near peak volumes over here because I was afraid we were going to get a rejection. Well, you could see that did really well. But here's the cool thing. Here's the cool thing about levering down at the bottom of the market, right? I bought a shit ton of Meta calls down here. I exited here. I made 500%. People that bought and held Meta from the very bottom made less right now than I made. So I moved that into other stuff like Bitcoin and shit. That's made me even greater multiples. So even though I did miss out here and I probably sold too much, I still made as much as these people that weren't in options. So whatever. Can't cry about that. Can I take a look? You probably didn't want me to just talk about myself in this. Okay, so let me look at it again. The .618 is going to be a bitch. We have this upward resistance line, and we have the .618. So I don't think we can get much past 600. And like, don't get me wrong, this thing's a cash cow. It's fucking stupid. What is it? Net income 14 billion last quarter. Ridiculous. But it's a $1.3 trillion company. I will say this: out of everybody, out of the big, magnificent seven, whatever it is now, I do think that these guys are such a cash cow. Their net income, it continues to grow at just insane rates, that I could see them continuing to do well. I just don't know. I don't know how much higher it gets. Maybe it goes to 752 or something over the months ahead. Maybe it can even break up here to 999, but I don't see it getting beyond that. It's going to start to slow down, and maybe it already is. Maybe it's going to back test and then go back up, but it's just not going to give you the multiple that other things can get. None of the large caps are, I don't think. They're going to start to slow down. Not that it won't do well. Maybe Nvidia does the best out of all of them. And then second would be like, I would guess Tesla is going to be the next best performer going forward, because these others are just like, they're just money generators, but their growth is going to slow. Jarrett Bell, Dell today. Thanks, Jesse. Also, if you're still looking at software and streaming, the setup that the daily trade Pierre has results in the highest resolution TA screen I've seen. Oh, okay, cool. I'll check it out. All right, so let me see here. So, and actually, if I do this, it helps too. That probably makes this easier to read, right? I got to remember to do that. So that probably gives you guys a better experience. Let me see. Maybe I'll do it one more. Does that look good? I got to remember what frame. Yeah, that looks pretty good. Maybe 110% is a good view. So maybe I'll just remember that in the future too, to try and do that. All right, so let me see here. Dell. Yeah, let me look at Dell. Dell. They're so old. I haven't. Michael Dell said some great things about Tesla's FSD. Love to see that. This is like such an old company to me. I just barely pay attention to it. Wow, it's done all right though. Yeah, I never would have guessed that. Is this Dell? Yeah, this is Dell. March 20th, down here. Did they relist or something? Why is this such a short time frame? The fuck? Did they move? Well, whatever. All right, so let's do this. Company's old as dirt, so you'd think they'd be around. Looks like we back tested. I mean, this thing's run a lot already from March of 2020. That's crazy. It's down in the 12. So you got 10x on this one. Dell of all things. Let me just pull this up here real quick. I'm curious. You got me curious seeing how this company's doing lately. Huh. There's an $84 billion company that's had declining revenue. Why did they go up so much? Am I looking at the same fucking company here? Am I tripping? So they're netting about $1 billion a quarter. 26 PE. I guess that's not horrible. They just probably had a state where they were incredibly oversold and we just never noticed it. Because 35 to 115. Anyway, the PE isn't that bad when you look at the PE, when you look at the value of the company, but I don't like the declining revenues. I don't know what their business is as far as growth in the future. Yeah, Tesla is paying for ads on Facebook, Instagram, YouTube, everywhere, I think. So that's great. Yeah, so maybe Dell's run its course. I don't see any growth in their financials. ABCL. I know my friend Arnie was talking about this, and I did look at it. I looked at it as an opportunity. It will not be my video tomorrow, though. So it has dropped a lot. That is true. Dropped a bunch more today, 6%. But I think that keeps happening, and here's why. And this will not speak to all of Arnie's points. Let's going to throw that out there. 1 second here. This won't speak to all of his points, I'm sure. But the revenue is non-existent. They continue to bleed money. Their estimates are to continue to bleed money. They are buying back, insiders are buying back the stock a lot. That's probably a positive sign. But institutional ownership is dropping along with short interest. And again, maybe there's reasons why the revenue will pick up in the future. But right now, I mean, we've got increasing operating expenses. We've got plenty of cash. But there's just nothing. This is a $1.3 billion company that has no consistent revenue. You never want to see this. You never want to see a company gain in revenue, like it's doing really good, and then just fall off the face of the earth and then have none. I mean, $9 million in revenue for a $1.3 billion company. Now, Arnie could be right in the future. This could be something that is a better opportunity in the future, but I don't want to keep bleeding, right? Like this thing was down 6.33% and then it bounced 1.6 in after hours. I don't know if it's done dropping. Maybe it is. This might be something where you could just do an asymmetric bet with a 2026. If I remember, I thought I looked at the options and I didn't love, I didn't see anything too interesting in the chain either, which is another reason why I probably wasn't interested. But I'll probably keep it on my long list. I've still got that bookmarked from Arnie's post on X. So I'll keep it bookmarked and I will look at it later. Jesse, I'm late on Hood. Would you recommend? I'd recommend for 30. Maybe it could go even higher. But yeah, you're pretty late. I mean, it would have been better way down near the bottom. I'm already up like I've already made 500-600% off of the options on it. I will say though that they're going to benefit from the crypto narrative, and here in a little bit, in an hour, I'm going to be hanging out with Tanner, talking about Hood and looking at their new revised, revamp, whatever they're doing with their gold membership. So that should be really interesting. I think this is an easy trip to the 30 to 33 range. So if you want to be a part of that ride, I think that's easy money. But there's maybe Bitcoin alternatives that are better. And we are getting steep in the RSI, man. The RSI is in the 80s. It could go up to 90, and that's probably what we would be at when we get up to 30 here. But I don't know. I think there's better opportunities if you're just jumping in now. All right, back to back. Your machine. Thank you, Jesse Rand. Geez, I've got so many things to look at. Holy crap. Let me get back to where I was here. Did I just jump ahead? Crap. Oh my God, there's so many comments. I'm definitely going to have to do like an extra session here soon because there's just so much to get through. All right, where was I? Here we are. Okay. Do you like Beto or should I focus on CleanSpark? Yeah, focus on that. Focus on CleanSpark. Focus on Cipher. Could you look at Aries, Edwin? Okay. I don't think I have that one. Wow, there are so many comments that I'm not caught up with. Wow. You guys are beasts. There's a ton of you in here. All right. I'd have to figure that out from the starter alpha and whales because we're getting so many requests. This is going to be hard to manage. All right, this company's done obviously really well. $25 billion cap. So the stock looks great. Let's look at the financials. They had a really good Q4. Looks like looks like revenue's choppy for this one too. But EPS looks all right. They're netting a couple $100 million a quarter. 35 PE. Revenue growth was 59% year over year, but it's choppy, so that's kind of deceptive. They're diluting shares. Their operating expenses have skyrocketed. That's weird. Short interest is low. Institutional ownership is high. This is an asset management company. What do they manage? $25 billion, and the stock has just went up like fucking crazy. Why? I guess I don't know enough about this company. You might have to tell me more about it. I'll save the chart here, but it's went up a lot, and I can't see any justification for it as of late. March of 2020, it was $20, then it went up to 147x, and I just don't understand why. BD, very true. Transportation is a good forward indicator, having worked in an exec position for 27 years in transportation company. 100% true. Yeah, it is, man. Understanding what's happening to the Dow Jones transportation is smart. Matt Seeger, thanks, Jesse. I am forever grateful. I was in STR January before the ETF release and only kept with it due to your tweets. Kept on adding small amounts and now up about 200%, my biggest ever month. Freaking awesome, dude. Congrats, man. Hi, Jesse. IoT, please, from Dinesh. Hey, Dinesh, one sec, dude. I don't know if I have that one, so I'm going to... All right, and I might keep going till about 5:30, guys. Then I think I'm going to take a breather just because I had the CleanSpark fireside chat. And I need to have just a little bit of a break before we move into the hood call. All right, so IoT. This is Samsara. Probably butchered that the first time. $22 billion. It's went up a decent amount. $8, $42. Cool. Owl. I dig that. Wow. Steady Eddie on the revenue, man. That's sick. Looks like a software SaaS type company. Software infrastructure, San Francisco, California. 21 billion. Net income's not great, but the growth is good. But burning 113 million, I don't dig it. What are estimates? Estimates are actually becoming maybe profitable, or at least EPS getting positive. That's good. Huh. But here's the thing I don't like. I would love this stock if it was inverted. So if we flip this thing around, how do I even do that anymore? If it looked like this, and then I saw this and saw that they were going to be profitable, I would be like, fuck yeah, let's get some of that. But it looks like this, where it's already ran 4x over 4x from the low. So I can't say I'm too excited about it. Plus, it's a $22 billion company. If you knew a bunch about it, like really good reasons why it was going to excel in the future, then it would be interesting. Otherwise, I'm not sure. Jesse, got a bit of cat. John, okay. Jermaine, hey Jesse, I'm late on CLSK. I want to buy ASAP. What do you recommend? No options. No options for Bitcoin right now. I would just get the stock. You can get like a good return. If you want a 10x, maybe go with Cipher. If you want like a 6-7x, pretty clean, go with CleanSpark. But I wouldn't be buying options. It's too late in the game for that, man. It's too dangerous. Don't fuck with that shit. John, Tesla. Okay, we already did that. Chris, Wild Frenchie. I'm going to be mind-blowing if companies start doing that one after the other. Oh, maybe buying Bitcoin, you mean? I mean, miners might. Jameson Coat, huge question. When will you exit the BTC miners? Again, I'll probably be doing that. I'll be looking out probably a year before I think about it. Historically, Bitcoin halving cycles blow up in Q3 to Q4, late Q3 to late Q4. And so I'm going to start to really pay attention to what's happening with this stuff in Q1 to Q2. And I'll be very wary of macro conditions that might hurt us. Okay. And so I'll start to dial out maybe around then. And I'll be super transparent, guys. I'm not going anywhere. You know me. I put out my trade stuff every single day. I'm going to tell you if I'm thinking about selling stuff in the future. I'm going to tell you that. So I will give you more information as time progresses too. All right, Joe. Bought more CLSK, Cipher, holding MSTR forever. All my big gains short. I dumped back into SoFi, Hood, Tesla. You're the best. Cool. Danny Ventura, Jesse, you stated not long ago that BITF is the best of breed in a small cap. I said I thought it was, but Cipher's been outperforming them since I said that, and to me it just looks like a better stock. And I don't know the accounting rules. I can't pretend to know the accounting rules in Canada as well, but it seems to me like Cipher is doing better in the United States versus BITF in Canada, and the CEO stepping down without another one coming up, it's just additional risk that I don't want, especially when I do this comparison. And again, you guys should look at Sebastian Ski's stuff here. When I look at the comparisons between or even just again, you could use visual stocks. When I look at the comparisons of a BITF versus right here, let's just do this Bitfarms. And I just look at mining production going down a little bit, but their hash rate's climbing. They're doing all right there. They got Bitcoin, not a ton, but they got some. So they're benefiting. Well, again, they're not benefiting from the FASB accounting rules because that doesn't apply to Canada. But you can see where they're still net income's negative 56 million, revenue's going up. They just seem to be struggling a little bit. Institutional ownership is increasing, but all of them are. And the estimates are getting a little bit better, but still not even net positive for Q1 and Q2. Let's see what Cipher looks like. And the amount of expansion and hash rate is another key part that we should talk about in a second. But so revenue for these guys is going up. They were already profitable this last quarter. their hash rate continues to climb as well. They've got a decent cash position. And when I look at estimates here, they're going to see more in Q1, maybe a dip in Q2 after the halving. They're gauging for that. That's smart. But they appear to be doing better in here. Now, don't get me wrong. There's a big sell in Q1, massive sell. So if there's anything not to like, it would be that. But expansion, let's look at that real quick. And then we'll move on here. 1 second. Let me find Bitfarms. So Bitfarms is going to go to 21 exahash too. So they're going big. See what Cipher's at. Cipher's going to do 17, so they're comparable here. Let's just look at something real quick here. Cipher's HODL is growing really quick. I like that. I like the fact that they're focusing on expanding their HODL dramatically. I wish they would have done it earlier. Wish they would have done it through all of 2023. But still, they have a decent chunk right now. Let's look at their mining equipment. They've got some old stuff. They got 8800s and 100,000s. Those will need to go away, but they also have a lot of the new stuff, the 20s and the 190s. And so all this stuff, a lot of their hash, then they've got some other stuff up here in the 150s. So they've got a decent amount of their exahash right now running new equipment. And 1,433 Bitcoin. Let's go back over here to Bitfarms. So they have almost twice what they have for the HODL position for Bitfarms. And the way that they're accelerating, I'm thinking it's probably going to get even higher. So I like the way they're managing their Bitcoin stack and the fact that, and again, they probably can better because of FASB accounting rules versus what Bitfarms can do because they're Canadian based. So I just don't know, again, like there's a number of other things to look at here too, not just this. So again, these guys have newer hash coming on. They got some hydros that are going to be coming, but that's high maintenance to maintain. But they're both aggressive on their expansion. And again, Bitfarms could do all right. I got out of it because I needed cash. I didn't like the CEO stepping down before the halving. That, it, to me, just screams of a red flag. Could this one do as well? They seem like they're as aggressive. They're comparable to Cipher. Comparable. But I'm going with Cipher. If nothing else, based on valuation. All right, so where was I? All right. All right, Joe, thank you. All right. Hey, we have revisited DLO recently. No, I haven't. I can pull it up. So this is one. I think I have about 28K in this right now. Let me see if the chart has changed at all today. I haven't really paid attention to it. This is one where, again, this is like maybe up to 1% of my portfolio. So it's a very small position for me. And I own both stock and options on it. So if it drops, I sell the stock and then I buy the options as long as the company's doing well. But I think that we're establishing a base down here. And maybe we test down here some more. But if we can hold on to this and grind up into here, then we're going to be looking for a breakout zone. And then it's up to the fib around the 24 range. And so that's kind of what I'm focused on in this one. And yeah, I continue to hold. I'll just be adding to that. Again, worst case, I'll sell stock and I'll buy my options if it goes down more. All right. Thank you, dude. It's Rodney Dangerfield page. Okay. Jesse stated to. Okay, so that's that one. I skipped a few and then got to that one. Jesse's still hoping for your fib video. Yeah, again, I've got the trading view video and I cover some of that. Back to my personal page. All right, $30 for all you guys, worth it. Jesse, you changed my life. Okay, cool. Thanks, man. NBTS, long shot, chip maker. I think I've already looked at this one. The Patro, I already did PayPal. All right, so I might look in this, might sift through the rest of this real quick and just see if there's anybody in here that tipped, because we're getting a little tired. But let's see, we'll do NBTS. I feel like I did that one already. Yeah, okay. All right, so NBTS, well, it fell even more. Navitas Semiconductor. These guys are just getting brutalized. They've met earnings expectations. Let's look at over here on their financials. Financials must not be good, because this is a sector that you'd think would be taking off right now. Revenue looks good. I mean, they're growing. Estimates are going to drop a little bit, but they're getting their EPS more in line with, oh, this is kind of interesting. Cash flow, massive drop in cash flow. It's the activity. Institutional ownership is declining dramatically. Q1 of 2023, they sold. Short interest is increasing. There's got to be something here I'm not seeing. 769 million, but they're not profitable. They do semiconductors, Dublin, Ireland. Maybe there's just, yeah, there's got to be something I'm not seeing. Again, expectations are dropping a little bit. Like revenue might be slowing after having a really steep incline, but it's weird. There's got to be some news here that this is just so much worse. I mean, it's went down so much. This is one I might take a look at, because it's odd. There's something here I can't see within the charts and the financials. Got really, really beat up for no apparent reason. Because they're beating on earnings, and I mean, they're not incredibly overvalued. It's not like they're a $10 billion stock that's not making money for their net income. They're only 769 million, and they are seeing revenue increases. So maybe they could, and operating expenses aren't climbing a lot. So, and their share actually, it looks like they did the opposite of share dilution this last quarter. So I don't know why this is so beat up, but I might take a look at it. If I get time here. Running out of time lately. All right, so I'm going to scream through here real quick and see. All right, so David, you gave a tip here, so I'm going to pull that one up real quick. Just because I don't want to forget you. CYBN. Hope you have time to look at this. Maybe talk about CYBN, treating depression and anxiety with psychedelics. Big investor. Cohen is a big investor. Okay. Well, I mean, I like the idea of using alternative medicine. I don't trust hospital and medical systems much anymore. They've done jack shit for me. Okay. So this company is 174 million. Let's see what they look like. But yeah, I love the mission. Ouch. But they made no money. So there isn't much I can tell you on this, man. They just lose money. It's all they've been able to do since 2020. Why do they have no revenue whatsoever? Institutional ownership has been increasing pretty dramatically. That's kind of interesting. But no revenue whatsoever. I don't know what to say about that, man. They're operating. It's like the opposite of what you want to see. Their expenses are going up while they have no revenue. Yeah, so I can't give you anything on this, man. I'm sorry. It's just looks weird. Could fail. Could maybe do all right. All right, guys. I hate to cut it off here, but I'm gonna have to just to take a little bit of a break until I hop on the next one here in about 45 minutes. So sorry, just a lot of backs to backs today, but I will try. And if I didn't get you to today, again, for the market recap tomorrow, just hop on there when I publish in the early AM and add your comment so that I start at the top and work my way down. So if I missed you today, I'll get you tomorrow. If you do that, eventually this might be unmanageable as the number of members are growing way quicker than I thought they were going to. So we might have to figure that out as far as the stock request part because it's getting interesting. All right. Anyway, I love you guys. Probably going to sign off here now. And again, I'll see people that want to participate in the Hood stream in about